what are the larger aspects when the Prime Minister says that we are working with a strategy to address short-term, medium-term and long-term impacts? What could the strategy be? What should be those strategies that India must adopt?
So the crisis should be a learning point as to making the domestic economy more resilient.
I think the top priority from the short term as well as from the medium to long term perspective to me is energy security.
I would say ease the whole process of this whole regulatory and approval process, because unless
Deregulation, basically.
deregulation, unless you do that, whether you're talking about energy efficiency, resilience, job creation, nothing would play out.
You be non-aligned and stay non-aligned. Don't go and side with anyone. That is first thing. They're already doing it. Keep doing it.
Correct.
So that is the first thing. Secondly, don't ignore coal and nuclear.
Hello and welcome to Fortune India Boardroom series. I am Ashutosh Kumar. The West Asia crisis has thrown the global economy under the bus, and it has also posed fresh set of challenges to the Goldilocks moments the Indian economy was enjoying just a couple of months back. In fact, the current issue of the Fortune India magazine on its cover talks about the price of war, and we have discussed in the magazine as to how the Indian economy has shown a very resilient face, and it has been braving the storm. But the question really is, what are the next policy frontiers? What are the learnings from this whole crisis? And to discuss about all these aspects, I have with me a panel of eminent experts. Mr. D.K. Joshi, Chief Economist, CRISIL. Mr. Indranil Pan, Chief Economist, Yes Bank. Ms. Anubhuti Sahai, Head India Economic Research, Standard Chartered. And Mr. Venkatesh Balasubramaniam, MD and Head Research at GM Financial. So the first question that I would like to put to the panel, in fact, is I'd like to begin from a quote of Prime Minister Narendra Modi. In his address in the Rajya Sabha, he said, and I quote, "The government is working with a strategy to address short-term, medium-term and long-term impacts." Now, we have seen some of the short-term measures that have been taken by the government in terms of the excise cut on petrol and fuels. All these are measures, in fact, some of the tweaks that have been done, mostly focused on restoring the supply and maintaining the supply. But what are the larger aspects when the Prime Minister says that we are working with a strategy to address short-term, medium-term and long-term impacts? What could the strategy be? For that, sir, Joshi sir, I'd like to come to you first, to begin from you first. What should be those strategies that India must adopt?
See, we live in an economically integrated but a geopolitically fragmented world. And the kind of shocks that we've been seeing after the COVID, I think they seem to be increasing in frequency. So you need a lot of policy agility to deal with it in the short term. But I think from a strategic long-term perspective, I think one thing is very clear, that energy security doesn't necessarily end at securing your supplies. I think you need to look beyond that. And here I think what becomes important is how do you become Atmanirbhar, so to say, to the extent possible. So renewable energy focus is clearly one of them. I think on top of that, we also have nuclear, which is being talked about. So these are some of the things which we will have to keep pressing. But if you want to maintain balanced power supply, I think you will also have to depend on coal, because the renewable itself cannot take care of the grid stability issues. So storage, which is battery, nuclear, coal, in a cleaner form. I mean, it need not be dirtying the environment. I think you can wash coal, you can do a number of things like gasification, etc. So that is energy security is once again the highlight. It keeps coming back again and again in history. This time again, I think it has come back in a big way. So you need to address that. Second, I think from the food security perspective, I think we are world's largest, most populated economy. And here I think the securing your fertilizer supply is very critical. India is extremely dependent on imports of fertilizers, and also on production of fertilizers domestically depend on imports. So I think so these two aspects are very, very critical, I think, for any nation.
Right. Pans are coming to you. what should be the next policy frontiers? What are the lessons that we draw from this? The kind of challenges that we have seen, the LPG disruption, the several other supply chain disruptions that we have seen in the wake of the war. So where do we go next in terms of learning, taking the key learning from the disruptions, and what next, so to say, for the Indian economy to kind of insulate itself from such challenges in the future?
So I think I take the points DK mentioned, and I think very valid points. Energy security is one thing that India needs to work on, and he talked about renewables, etc. But I think it's a much longer term goal, in the sense that we have not really worked enough in terms of sort of building up reserve capacity so far as crude is concerned. And yes, the reliance of India on crude has gone down, but it has not really totally gone away. So I think building up strategic reserves of crude is very important. So that's one big learning from this crisis, because my feeling is that the geopolitics of the Mid East Asian economies is so fragile at this point in time that even if this war gets sorted out, the implications of the supply chain through Strait of Hormuz can actually sort of get fractured at multiple other situations. I think the second thing which DK also mentioned, food security. Unfortunately, through the budget, we have not really had enough increase in terms of the R&D, whereby we can create our own hybrid sort of crops, high-yielding crops, and that provides the food security for us. So I think these are some of the very strategic ways that we need to take learning from the current crisis and build the economy in a better, more resilient way. Of course, looking at the domestic perspectives from a growth arena.
Anubhuti, your take on, in terms of policy making, what are the areas and arenas that we need to tap so as to kind of deal with such crisis in future?
Sure. So I think I would just, like on the fortifying the supply, DK as well as Indranil mentioned about fortifying supply. I completely agree that there has to be a lot more stress on renewable energy, and whatever measures are required to increase the pace of both renewable energy generation plus transmission, that's needed. And on SPR or Strategic Petroleum Reserve, I would say we also need to look beyond crude. The most important channel via which India got impacted during this current Middle East crisis was not on crude oil, but the most important hit was on LPG. We really don't have any strategic reserves there. So I think that is something which we will need to do. The other part is optimizing demand. Whenever we are, it's a fact that India is and will remain dependent on imports when it comes to securing its energy requirements. We just don't have that capability. And we can take various measures to reduce the dependency, but that dependency will always remain. And to that extent, it is important that we also take care or optimize our consumption. This was not a very well-known fact, but now it is in common domain that India uses double the amount of fertilizer which it needs to produce the same amount of crop. So the creating awareness, tracking how much is used, that is something, because fertilizer, if you look at it, we import $12 billion of LNG, we import another $4 to $5 billion of fertilizer. So that will save dollars, plus also impact the overall health of the economy. The other part is related to, again, LPG. I think this hybrid cooking method needs to be inculcated. If you look at examples of Hong Kong, etc., they are purely driven by induction. In urban areas at least, where electricity connectivity is available, I think that is something which is needed. Public transport. 100% of petroleum is used for road transport, and that can be optimized if we start looking at it. So I think it's a combination of both securing supply as well as optimizing consumption in order to improve our resilience, because these kind of shocks will now become more frequent than what they were over a decade back.
Right. Coming to you, Venkatesh, what I'd like to understand from you as to how you are into basically the equity market. How are the global investors actually looking at India and India's resilience, and what do they expect the Indian government and Indian policy makers? How do they expect the Indian side to respond to such crisis, and kind of build in systems so as to kind of insulate the Indian economy from such future shocks, which everybody believes are going to be more frequent in the years to come.
Okay, I have a slightly different point of view. I don't think India was totally unprepared for this. So if you look at data over the last 12 to 13 years, so if I go back to let's say 2012 or 13, if you see oil imports as a percentage of our total imports, it was around 37%. That is down to 23% already.
Right.
Secondly, oil imports as a percentage of GDP was at around say 9%. It's at 4% already. So that diversification was already in play in terms of building out renewable capacity. So we built a lot of renewable capacity. There have also been productivity gains in the economy in terms of the simple thing. 12 years back, 1 liter will take your car only so far, but now it takes your car further.
With the hybrid.
We have also started using hybrids. There are electric vehicles on the roads. So that preparation was already underway in the economy. Where maybe we could have done something is we perhaps should not have stopped coal capacity additions in between.
Right.
Like one of our eminent panelists already mentioned, there are ways, what are the 3 key pollutants there? You have nitrous oxide, you have sulfur dioxide, and you have carbon dioxide.
Correct.
So for sulfur dioxide and nitrogen dioxide, there was already a feature there how to prevent that from going into the environment. So there are FGD, all these implementations have already happened. What we didn't implement in the next stage was carbon capture. We just stopped coal capacity addition, which perhaps shouldn't have been done. It's a different matter that if you keep adding solar on the grid becomes unstable.
Right.
So that is a new problem we have. So we are once again embarking on coal capacity additions.
Right.
Now, other than that, so when you talk to foreign institutional investors, they already know that India has been preparing. Perhaps you should not be having only 8 weeks of strategic petroleum reserves.
Right.
Maybe you should have 6 months or 8 months of strategic petroleum reserves. Now, managing that reserves is not the problem. The problem in India is we don't have enough storage capacity for those reserves. So maybe that needs to be built out. So these are some of the things which are there. And frankly, I think investors also realize that since the time Trump has become president, we've had one black swan event after the other.
Yeah.
You don't have 3, I don't think anybody expected the Trump tariff war which happened, but it has happened.
Right.
Nobody expected Venezuela, it has happened. Now, Iran has happened.
Right.
Just before Iran happened, we were all very happy. We were at about $62 per barrel crude oil prices.
Yeah. As I mentioned, the Goldilocks moment, high growth, low inflation. Now that entire matrix is kind of changing.
The problem is how do you prepare for things which you are not expecting to happen?
Right.
So it's a very hard question to answer. What investors are hoping more is that things get resolved fast. If it gets resolved in let's say 1 or 2 months, maybe a little bit of the, a few basis points on the GDP gets shaved off and we are okay. But if this persists like the Russia-Ukraine war, it becomes a bigger problem then.
So coming to you, sir, basically, given the kind of challenges that we are having now, do you think that as a medium-term kind of measures or initiatives like the government did during the times of COVID, some kind of hand-holding may help, some kind of credit enhancement scheme or the kind of packages that were brought at that time, or maybe in terms of some more of Atmanirbhar initiatives, what could be the blueprint, so to say, of hand-holding the industries and the sectors affected by this whole crisis going forward in the medium term?
Well, I think you need in the medium as well as in the short term.
Right.
But you need a playbook. And COVID-19 did provide a playbook because like COVID-19, this also has a multidimensional effect. It
Right.
is a kind of a poly crisis. It touches many points. So now if you look at, let's say, we spoke about agriculture. So agriculture, I think apart from the things that we've generally discussed, I think there's also an issue that we overuse nitrogen. So I think, and if so that can be that's an outreach issue which can be sorted out by educating the farmers more. And then I think so that is one thing that we need to do. Second, I think Anubhuti had talked about more R&D, etc. I think your productivity improvement is very critical.
Right.
Now, I think I'm coming to the more the other aspect where I think we need a definitely strategy and also I think a playbook is manufacturing. So if you look at the GDP data for the last 3 years, manufacturing has been the leading engine of growth.
Right.
It's 11.2% per year. Now, in this shock, I think manufacturing gets impacted more. Consumer is protected,
Correct.
I think, but most of the stuff goes towards manufacturing. So that is why ensuring that I think credit flow is there, and also there is some moratorium if needed. I think all those things are very important. And manufacturing, government is already doing things like they have reduced import duties on petrochemical related stuff which go as inputs into the manufacturing. So you need to handhold, I think, in these times. And depending on the nature of crisis, since this is, as I said, this can be a multidimensional crisis, so you'll need a kind of playbook that you used in COVID, and actually we very successfully used it. I think unlike many other countries which were just consumption focused, I think our investment support to the economy actually turned out to be very positive, and it actually raised the potential of the economy.
But sir, do you think that with the potential rise in the rates, given the expectations that high inflationary expectations, won't that be kind of counterproductive as far as manufacturing is concerned?
Well, I think manufacturing depends on a number of things. I think interest rates is just one of them. I mean, what I would say is that if inflation, right now there is no visible impact on inflation, at least the March numbers are not showing.
Yeah.
And I think even the forecast by different entities is reasonably benign. I mean, it is still in the 2 to 6% range. Don't forget, this is over a very low base. So I think nobody is seeing a huge pressure on inflation. So our assessment is that in this scenario, you can expect an extended pause from the central bank, not a rate hike at this juncture.
Okay. Indranil sir, your views on high prices versus and whether they will impede manufacturing?
Well, I think there are again multifaceted sort of ways prices can actually impact your economy. So one issue, of course, is DK has talked about the manufacturing segment. I am not sure whether this is a COVID-like crisis, in the sense these supply chains have been impacted much more significantly, and we can't really see an end game to the whole situation. So that's the problem. Now, for example, we hear that the tiles industry in Morbi is almost shut down.
Right.
Yes, petrochemical sort of duties have been cut, but the supply is the problem. It's not really the pricing that is the problem. Now, in these conditions, I think the hit that the economy also may take, if this extends for a significant period of time, is loss of employment. And in that case, I think the prices will be benign, but the growth will actually take a bigger hit.
Right.
And it may not be feasible enough at this point in time for monetary policy action alone. So it has to be a dual cylinder firing, which also happened during the COVID period. The fiscal has to push also. Yes, the fiscal has been relatively more open in terms of absorbing the price shocks that the economy is facing. But to a certain extent, we are also reaching a limit in terms of how much more we can grow infrastructure or capacity expansion through capex of the government.
Right.
So the government needs to therefore look at some other avenues for investment, which includes, say for example, the healthcare. So there is a productivity benefit by doing both the healthcare and the education, which we have not really done, and that should have been a much earlier focus. We overall were looking at the productivity gain. So those are the softer areas rather than the hard infrastructure that needs to be really focused on.
Is that a strategy that will work? The capex and hard infrastructure oriented focus to something like what Indranil sir is suggesting. And also Venkatesh, would this kind of shift go down well with the foreign investors, FIIs? They are, habituated now in the last 5-6 years of seeing India investing more and more on the productive, very highly productive side of the economy, a large capex push, at least from the government side. So will this tweaking work, ma'am?
I think, that tweak is already at play. So if you actually look at the mix of investment which has been happening, we all know that investment, and especially private investment, has been very sluggish. But if we put government and private investment together, rather than the traditional sectors, like electricity, especially the conventional, because there was this whole disincentive to move away from coal to renewable. Instead of traditional sectors, we saw a lot of investment in the renewable, data center, semiconductor, battery. So these emerging sectors have clearly taken a lead when you look at the investment over the past few years. And this is a combination of government enabling framework. They have created that enabling framework, and interest from the private sector. So I think this tweak works, and probably we can see more push towards it going forward. But the issue here is that doing this or that is not, I don't think that's an option for India.
Right.
We need a very broad-based, we need to lift in manufacturing sector in all possible areas. It works, but if one segment is moving up and the other is not, then at an aggregate level, the growth to some extent gets negated. What I would also highlight here is that when it comes to price pressures, there are certain areas where India doesn't have much of a control. We really don't have control on where energy prices would land up or where global rates would land up. And if inflationary pressures turn out to be uglier than what we are anticipating, then Indian rates also have to go higher. But what Indranil was mentioning or referring to, that government really needs to look at other areas, what we call as silent reforms. If a central government project has a cost overrun of 15 to 22%, that on its own tells us in which direction we need to work in order to reduce the cost pressure. Yes, you will have to put more money on table to procure commodity, but if I am putting lesser amount in the regulatory approval processes, then to some extent my cost is managed. So I think it has to be a multi-pronged strategy, and it has to be a it has to be multi-sectoral focus.
Right.
Just one sector, one over the other, doesn't work.
Right. Venkatesh, your views on this, and especially also because we are also hearing that FIIs are now kind of, in the numbers we all know, but we are essentially seeing that after this 2018 debacle from China, they are now kind of making their way, finding their this thing to China again. So what's really happening there, and what are their expectations from us?
So I'll just first start with the earlier part which you asked me.
Yes.
What we think as a house in terms of interest rates is something like this. See, one is inflation is very low. So we believe even if this is not a prolonged thing, this doesn't go on for 12 months, you are very comfortable in terms of RBI's target, 4% plus or minus 1.2, 1 or 2%. So you're very comfortable. So, and secondly, the present dispensation in the RBI is more growth focused rather than trying to curb inflation per se. This is our view. So we don't think there are going to be rate hikes, at least in the short term. Now, even if rate hikes happen, I don't think that has too much of an impact on manufacturing or anything like that, because most of the corporate balance sheets are very, very healthy. So they are not over leveraged or anything like that. That a few 100 or 150 bps of interest rates going up will stop whatever capex they are doing. I don't think that happens. Now, but there is the other part of central government capex. Central government capex, if you see over the last decade, if we were spending, let's say, X 10 years back, we are already at 7x or 8x per year now. Now, the problem with everything is law of large numbers start catching up. When it was X, it can grow at 10%, 15%, 20%. But once it goes to 7x, it cannot keep going at the same pace. So as long as you are spending 7x or 6x, you're still okay.
Right.
Now, last year, I think they did pull back on capex, central government capex a little bit to make sure that the fiscal deficit targets are met. Now, again, the bigger worry from a domestic investor or foreign institutional investor is they put in a few things in place last year. One was there was income tax cuts, and then there were GST cuts.
Right.
The thought process was clearly let's push consumption.
Correct.
Right. And this consumption story had started playing out over the last 6-7 months. So if you see auto sales going up, growing at 15-20%, even some of the FMCG companies who've been complaining had started saying, okay, now we are seeing green shoots. I think now is the turn which is coming through. Now the worry is if this whole crude oil price going up and all these things passes into the economy, what happens is prices might go up.
Correct.
So will the big boost for consumption, does it get punctured prematurely is something which we worry about.
Right,
So that is something on the first part of your question.
Right.
On your second part, yes. If you see last year, FII selling has been almost 20 to 21 billion dollars. If you take the data from October, it's actually 45 billion,
Yes, yes.
October 24.
Yeah.
Now, in that 21 billion, interestingly, secondary market sale has been almost 28 billion dollars. There have been 7 billion dollars which have been put into the primary market. The markets were super expensive
And
year
those
and a
valuations
half
have-
back.
yeah.
They have corrected, they have become more reasonable, but we are still not cheap. We are trading at around 19 times 1 year forward if you look at the Nifty.
Right.
Historical average is at around 17.
Right.
Now, when you are delivering 15% consistent earnings growth, you can still justify a 19 times or a 20 times.
Right.
The problem is, I think FY25 Nifty EPS growth was 3%. I think this year we will end at maybe 7 or 8%.
Okay.
And there was a big hope that the next year is going to be 15%
Yeah,
growth
but
on the
that
Nifty.
may be-
But if that goes down to again 7 or 8%,
Yeah.
maybe there is no reason why the market needs to go up. But I don't think FII selling has ended,
Okay. All right.
to put it in a nutshell.
All right. Coming to the question on consumption, we rightly understand that, okay, a rate hike or a rate remaining the same will not affect the manufacturer's plan. But when the consumers are risk averse in a situation like this, what is the impact, and have the benefits that were given out with the income tax and GST relaxations, have they kind of vanished in the thin air?
No, they're still playing out. I think
Okay.
they'll be, in terms of inflation, etc., you'll see them continue till September. And some impact that you saw in auto sector, it may not be the same
Momentum,
thrust.
yeah.
But I think the auto sector still has a reasonably bright prospect. I think some benefits of that will continue. DBT is still there. I mean, DBT will also supports large part of that goes into consumption directly. I think, but from a long-term sustainability of consumption, I think income levels have to rise.
Right,
And this year, I think one, apart from other effects, I think the wealth effect from the equity markets is not very favorable. I mean, so you feel, so you become a little more cautious when you see your wealth getting eroded, I think, even though it is notional in many ways.
Right.
So I would say that have employment prospects improving becomes very critical for sustaining long-term consumption.
Right.
Because people, sustainability depends on what people's view is of consumption. Do they see their incomes as continuing to rise, or do they see it as a temporary phenomena? So permanent income hypothesis that we have. So if there is a belief that I think that incomes are rising, and that comes from better job prospects, etc. So skilling
Obviously,
and all
yeah,
these things
yeah,
become very critical.
Yeah, yeah.
So right now, I think a lot of support has come from the government, from the fiscal side. I think we also need support from better job prospects. I think which Indranil also spoke about, education and many other things become important, and skilling particularly. I think given that there is another shock in the horizon, which is from AI. I think so. How do you prepare your population for offsetting that kind of possible disruption? I don't know how it will play out, but
So those are really long-term measures. But Indranil sir, coming to you, in your view, has that runway been exhausted? The gains that we got from GST cuts and the income tax, are the consumers going to be more cautious and more careful as of now? And how will that play out in the economy?
So I think from a bank's perspective, what I can say is that the GST cuts and the income tax cut, supported by the banking segment, had led to a very significant increase in the unsecured lending.
Right.
So because commodities got cheaper, and therefore with funding available from the banking sector. So I think to a certain extent, it is getting neutralized by the wealth effect that DK talked about.
Right.
But wealth effect would be more in terms of the real estate investments, and if that actually goes down, it significantly supports construction, labor, etc., etc. So I think there would be a downsizing in terms of the expectations that we have in terms of consumption demand growth. Now it's good for the banking sector to a certain extent, and this is what I sort of consistently say, that we had been losing on CASA quite heavily,
Right.
maybe because of the equity markets or
Right,
whatever it is.
right.
We may actually get back something on the CASA. So that
Okay.
to a certain extent will enable us not to actually sort of increase our cost of funding. And therefore, the support that continues from the Reserve Bank of India can help in the consumption momentum. I think the other worry that I have is that we really still do not know what is the implication of El Nino, how
Right.
severe it is going to
Right.
be in terms of food production and food inflation.
Right.
Unfortunately, in India, food inflation impacts rural demand much more negatively, because here we are talking about more marginal farmers who don't have adequate marketable surplus, and they have to go out into the market. If he is doing say pulses, he still has to buy the cereals from outside. So that actually leads to a reduction in the benefits that the farmers get, and a higher inflation any which ways. Understood, it will be within the 4 plus minus 2% band. RBI doesn't need to react, but definitely lowers the real wages both at the rural and the urban segment. So these are some of the ways that consumption get impacted, and it also depends going forward in terms of what is the incremental hit that the economy has to take,
Right.
in terms of sort of factoring in the energy crisis and the supply chain disruptions.
Right, right. Ma'am, coming to you, your views on this impact on consumption and the way forward.
Yes, I think consumption will get adversely impacted. There is no doubt about it. There are various channels via which it gets impacted. Employment is one of them. You spoke about impact of GST. Is it getting faded?
Right.
Maybe few sectors it does. But for instance, if you look at the FMCG, after the GST cuts, companies which didn't want to change the price point increase the grammage.
Right, yeah.
Now they are reversing it. There will be a fair bit of cautiousness amongst the consumers, especially given concerns around job security. The double whammy of higher prices which they will have to pay. Look, as economists, we look at inflation in terms of number. As consumers, it's about what we are spending on.
Correct, correct.
And if I am spending a lot more on fuel, while the government has been absorbing all the hit on its book when it comes to crude
As
oil
of
pricing.
now.
As of now,
Yeah.
our sense is that from May and June onwards, it will become unsustainable, and
Correct.
some hit will have to be passed on to the economy. Along with it, if food prices also go up, and if shrinkflation takes hold, some hit on consumption is inevitable. And I will again go back to the point which was raised earlier. I think the crux of the problem, we keep on talking about short-term impacts. The crux of the problem is that the real income growth in India has been very, very
Right,
negative,
right.
like very small.
Right.
If you look at the June 25 number for which PLFS data has come out, the real income growth is just 2% for June 25. If your real income is growing at such a small pace,
Right.
then the capacity to absorb these kind of shocks reduces. So I think consumption will definitely get impacted both by Middle East developments as well as what we finally see when
Right.
it comes to the El Nino impact.
So, taking a cue from this particular point and the points that we have been discussing, okay, interest rates and all those things are there, but one of the important metrics is private investment, and that has been a worry, so to say, over the last couple of quarters and years, so to say. Amid this particular situation, when we are having wage issue, price issue, all kind of disruptions, I mean, what will excite an investor to kind of put in money into the economy, sir?
Well, I think private investment, it's not that it's not growing. Of the three components, which is government, household, and private corporate investment, corporate
Right.
investment has been growing at the slowest pace. So it's growing, but it's growing slowly. So that's point number one. Second, I think even within the private investment, I think there is a shift taking place. There's
Okay.
some segments which are doing reasonably well. If you have steel, you have cement, which are directly linked to what government does.
Government capex, yeah.
Government capex. And then there are others where I think there is either a PLI push or there is a demand I think data centers were mentioned. Data centers will keep, in private investment will keep expanding because there is clearly demand visible. I mean, you have 5G, you have AI, you have cloud storage. You need that.
And in fact, this whole Middle East crisis, now we are talking about Middle East plus one. The crisis also offers opportunity to India to kind of
So this will keep growing. I think the focus on renewables. I think that private investment part on that segment will keep growing. What is missing is, in general, what we say is a animal spirits driven huge growth in private investment, which we saw a couple of years back. I think that is still missing, and one of the reasons for that is, don't forget that we are living in a very uncertain environment.
Right.
When your tariffs are changing, you're not sure of the market in general. I think there will be caution. So despite corporate sector having the healthiest balance sheet among all the entities, I think they are very cautious as far as the investment is concerned. But it's not that private investment is not taking, but it's taking place in pockets where I think there is greater demand certainty. I think the corporate sector is going ahead and investing.
Would you agree or differ, sir?
Well, I think this has been quite a touchy topic for us. Why is private investments not growing? And I think the common logic is that unless I see visibility in terms of growth in demand, there is no need to add capacity.
Right.
And this is more true for the FMCG segment, which we are again saying will have a sort of bigger hit than maybe the infrastructure-led segments, whereas DK mentioned, say for example, the specialty paint, cement, steel, those will continue to add capacity. One data piece that I came across was CMI Q4 private investment expectations have been actually lower than in Q3, which necessarily means that all the expectations that we had out of the GST, the tax cuts, the lower rates to have pushed up the consumption demand domestically. The first puncture was the tariffs, and the global slowdown, which anyways reduces my external demand growth. And now we are talking about a domestic demand growth also being weaker. So I'm sure we will have a negative implication of this in terms of the private capex. And there is very little, as I said, that there is very little that the government can do at this point in time to neutralize that by increasing capex on the infrastructure side.
Right.
Yeah, if I may just add one more thing, I think the capacity utilization part, which is also a trigger for private investment, I think that is reasonably high at this juncture. It's not that you don't have high capacity utilization.
Okay.
It is. I think so. That's also a positive, but I think it's not translating because your decision making gets impaired in an uncertain environment.
Right. Would you agree on how the private investment is going to pan out, and what could be the way forward?
I would broadly agree. I mean, most of the points have been made, and again, I would refer to the point which I made earlier. Demand is at the core of every investment decision. I'm talking about the commercial investment decision, unlike, say, government, which will have much more a different set of objectives. And demand has not been growing. Let's remember, over the past 6 years, we have been hit by one crisis after another.
Yeah.
The government has done its bit. Initially, it tried to crowd in private investment by stepping up its capex significantly.
Right.
Then it tried to give a capex, demand push by cutting down GST and income tax, but that has been negated by various global shocks. So, for private investment to happen in the current environment, unless some strong incentives are provided, becomes very difficult. And I think the playbook which the government has used, whether it is about semiconductors or about electronics, I think that playbook will have to expand for many, many more sectors. Even if you look at renewables, blend financing, something like that would work. Or say expanding, in the banking sector, we have this whole priority sector lending norms and including renewables there. Those kind of measures, some kind of incentives, it has to be very clear that the burden cannot be borne by the government.
Right.
They have limited finances, competing claims. It has to be shared by every single sector of the economy, government, corporate, as well as household.
Right.
So I would say that private investment will take some time, and if we are talking about renewable, private sector is not going to invest massively into renewable unless you allow them or give them the flexibility to price electricity. So it has to be a combination of various factors, and unless demand certainty comes back, more price flexibility is provided, regulatory processes are eased, I think it will be very difficult for private sector investment to pick up in a big way, or similar to what happened during 2000, in the decade of 2000.
Right. Venkatesh, as a watcher of the equity markets and what the companies and the corporate sector is basically doing, in your view, what is the what is the scenario on private investment, and what could be the probable hand-holding that might be required?
See, I believe that most people have this very romantic notion of capex in India. Why? Because between 2003-4 to 2011-12, we had this crazy animal, like our very good panelists, that animal spirits in terms of capex. See, let's go back in that period. So when 100 rupees was spent on capex, correct, 60 rupees was being basically spent in the power sector. But over the last 20 years, we have spent enough and more on power. So we don't have like a deficit in terms of power capacity today. We have enough coal capacity, we have enough renewable capacity. The second big sector where spends happened was steel, because you need to spend a lot on steel. If you have to, so it's a big number. Now steel also we are very well invested. The other big capex was roads. We have spent enough and more on roads. Correct. So how many roads can you keep on building?
Right.
So there has to be an avenue to spend money, firstly. Now the second part was 15-20 years back, when the private sector corporate had to spend money. If you have to spend money, there are two things. Either you put a little bit of equity and you borrowed a lot of debt.
Right.
15-20 years back, I think a lot of corporates were working under the assumption that if I have to borrow, if I make money, I'll return my loan. If I don't make money, I don't really have to return my loan. Right? So when you are working with that kind of a scenario, where you can get away by not repaying your loan, it is very easy to do projects. It is easy to overbuild even uneconomical projects. You will actually spend money.
Right.
Today the problem is you need to return your loan. So it is much harder to have animal spirits today. Perhaps we are better off with this kind of environment rather than having bad loans in the banking system. So that is one part of it. Now, is private sector capex happening today? Of course it is happening, because there has been huge renewable build out. So that has happened using private sector.
In the sunrise sector, so to say, you mean.
Similarly, we are having huge build out which has happened in electronic manufacturing.
Right.
We've had a decent amount of build out is right now going on in semiconductors. So there's huge capex happening in Dholera in Gujarat. There's capex happening in Assam, where the Tatas are spending. So it is definitely happening. And interestingly, in this particular budget, they've also given an income tax holiday for your data centers. So that is going to be a next 15-20 year kind of a story. So I think selected piece where the government is pushing either through PLIs or through tax benefits, capex is happening. I don't think we are going to get back to the, let's put up a power plant. We will figure out how to make sense of it later. All those things are, I think, behind us. So this is more logical capex which is making sense. So private sector capex is happening. It is not perhaps happening the way it used to happen 15-20 years.
Not very aggressive, but very steady, so to say.
And I don't think we are going back to that 15-20 years. Perhaps in the next 15-20 years, I don't see that happening ever.
So before we conclude, I would like to take your views very quickly on this entire rupee volatility and the external sector risk. What should be the policy prerogative over here, sir? Beginning from you, sir.
I think, first of all, I think we need to realize that we were patting our back in terms of the low current account numbers. Unfortunately, if I look at the first 3 quarters of numbers, the capital account was always emerging as the biggest risk. The problem is that the capital expenditure, the foreign investor participation as well as the FDI, we have been talking about renewables, etc., etc. There is not much of a incremental pull that I can see from that perspective. So yes, private capacity has been built out, but the problem is that they have been in very narrow areas. So by looking at the numbers on the private capex and saying that we are doing good is possibly not the best thing to look at if I am talking from the FPI perspective and the FDI perspective. Now, the other thing that becomes relevant for me is that there is the pull factor. There is a push factor also, in the sense that most of the countries from where we used to get capital, they are laden with their own fiscal problems, which necessarily means that it is very difficult to see unless I in India can afford or sort of my risk premium goes higher and my yields become that much more attractive, it's very difficult to sort of pull in capital. And on other side, we'll see a current account deficit going higher and the capital account flows being as low. So I'm sure the currency will depreciate. The pace of the depreciation is that we can be talking about. RBI has taken some steps in terms of trying to contain the speculative way that the currency was moving. But I think it doesn't really take away the fact that structurally the external sector is, I think, the biggest weakness. And if the fiscal also tends to go higher, that would be a further negative when I am looking from a FPI shoes. And therefore, the currency has to depreciate. Volatility may be relatively lower. Incremental steps that the RBI can take, possibly sort of if energy prices go even higher, maybe RBI can meet some amount of the oil demand that is there. But ultimately, it would erode the the forex reserves. The other big problem, I think, I'm not sort of blaming anybody, but with the ramp up in the gold prices, most central banks had moved towards gold, which is not a liquid asset when I am fighting a currency pressure. So the foreign currency assets per se has actually relatively on a percentage basis gone lower within the FX resources. And that is likely to be another issue why an emerging market currency who is a net importer of oil has to depreciate faster.
So I think the 25-26 story on currency capital flows, it was completely disconnected with the benign macros. You got good growth, you got low inflation. Typically, you should have got more capital. Now, I think so. So what happened on the currency front can be looked at from the point of view of how vulnerable you are and what is the quantum of shock. Just to give you a historical example, in 2013, you were very vulnerable. And so even a little shock from the Fed was enough to roil the currency. This time, so this time your vulnerability was low, as I think Indranil was also pointing out. But the quantum of shock was still quite high because one, I think, as Venkatesh said, the valuations were high, and then capital is moving towards countries which are plugged into the AI story. The US heavy investment in AI, I think has been good for countries which are feeding into that. We don't feed into that. So I think so there is a tactical capital moving away. And now I think with this current crisis, I think there is a safe haven factor that has again started playing out. So capital is again moving out. So even if in compared to 25, 26, 26, 27 with high oil prices, we'll see our vulnerability, which you can summarily measure through current account deficit, rising a little bit. And I think the shock element is similar in nature, and so that's why rupee is under pressure. I mean, so it's not. So what it means is that that even benign macros don't guarantee you a stability on the currency front. In this fragmented global environment.
Exactly. Very quickly, your view, ma'am.
Yeah, I would say that, it's if you just look at RBI's reaction function over the last 12 months, it's very clear. They are far more open for rupee volatility, two-way volatility and weaker rupee. This is a departure from what used to be the case 2 years back. And this is not just because of some policy change. I think it is very much a reflection of change in the fundamental. I'm not saying it is structural, but at least for now and over the next couple of years, the biggest change which has happened is in the direction of capital flows. Just to give an example, we had a similar shock. I mean, oil price shock is not new to India. We have seen it again and again and again. But every time we ended up with 6 months to 12 months of pain, and then we came back stronger. Every, balance of payment deficit, the way we try to assess the external sector resilience, balance of payment deficit used to be a rare phenomenon, deficit. We have always recorded surplus for the last 25 to 26 years, few years of, 1 year of deficit here and there. This time, even if oil prices comes down towards $85 on an average, India is set to record third year of balance of payment deficit, and that clearly shows the sore point, which is capital flows. I would have a slightly different view, in terms of vulnerability. Of course, this is not 2013, but we are not in the same position as we were in 2022. FX reserve adequacy, the way we look at it is 6 months of import cover and 6 months of, and whatever short-term debt is maturing over next 12 months, taking out all the debt which can get rolled over. It is very similar to what it was in 2022, but if you add FPI and FDI flows, it is significantly lower. I mean, just to give a number, $100 billion of capital flows 2 years prior to Russia-Ukraine. This time we have seen capital outflows. Now, if you are in that kind of environment, same level of oil price will have a much bigger impact on rupee. So, way for rupee is to be weaker, no doubt about it, and there is a clear increased tolerance at RBI's level to allow that weakness to play out. And we don't think RBI will intervene very aggressively because they have to preserve their reserves for future shocks. So I think external sector definitely needs more agile management than what was the case when FDI flow was at $40 billion versus negligible amount today.
Right. So going forward from here, just before we wrap up, I'd like to ask all the panelists, I mean, we understand that there could be no right prescription at this point of time, but two measures, that very important and very critical initiative or measures that can be taken at this point in time, at this juncture, beginning from you, Indranil sir.
Well, you have, I think, asked the most difficult question for all of us.
No, that's why I said two, only two.
Yeah, even if you had asked one, it would be difficult to answer at this point in
Right.
time. I think a clear, for example, the two fiscals back, we had seen a lot of talk about employment generation, etc.
Right.
Now, if I look at even the previous budget, there was not a single sentence on skill and employment.
Right.
So, what is the incremental build out on that?
Right.
And as I think Anubhuti rightly mentioned, the problem is that we are not employing people enough, and that is something that the government on a longer term strategic basis needs to look at. I am not really sure whether there is any short term solution just by looking at the crisis.
Right.
So, the crisis should be a learning point as to making the domestic economy more resilient.
Right.
And also work on the reduction in terms of energy reliance on the rest of the world. So, those are okay, but I think from a longer perspective, in fact, similar rated economies within the Asian region has a much bigger per capita income, and we are stuck at a very low level, and we are struggling to get out of that. And in that way, we will never be even able to achieve the Viksit Bharat of the 2047 that we envisage.
D.K. Joshi sir.
So I think the top priority from the short term as well as from the medium to long term perspective, to me, is energy security.
Right.
I think we are a growing economy. Our dependence on oil itself is expected to grow at a very fast pace. So I think we need to make sure that we are doing ample stuff on securing energy, because that is the lubrication for the economy. The economic machinery can't run without energy. So that would be the top priority. And this crisis has brought that back again, I think, into the focus. I mean, this is the theme which keeps returning again and again. Second, I would say is, I think if I were to look at the way the supply chain focus should be on resilience as much as it is on efficiency. Because I think this crisis has again told us that I think everything based on efficiency makes you more vulnerable. So I think I would say that resilience should become the focus now. Even at the cost of some efficiency.
Yeah. Top priorities, Anubhuti.
I would say ease the whole process of this whole regulatory and approval process, because unless
deregulation, basically.
Unless you do that, whether you're talking about energy efficiency, resilience, job creation, nothing would play out. So for me, the key focus area is we need to cut down on this whole bureaucratic challenges and reduce the cost, and therefore boost the return on Indian assets. In today's world, it's very important to have an attractive return when we are competing with AI theme. And I think this is the most important part which India has tackled, but probably not with the full thrust.
Venkatesh, your views.
See, two things to survive and learn from this crisis. Firstly, remain non-aligned.
Right.
Don't stand with anyone.
Right.
So
Which India's stated policy is.
so that your ships can pass through the Strait of Hormuz, okay, and you get your LPG. You can buy Russian oil, provide, and they will give you a discount. You be non-aligned and stay non-aligned. Don't go and side with anyone. That is the first thing. They're already doing it. Keep doing it.
Correct.
So that is the first thing. Secondly, don't ignore coal and nuclear. Okay, just because the whole world is saying, this whole ESG mandate and we should not use coal as a fuel. Europe as a continent is suffering because of that.
Right.
Okay, there are ways to make coal cleaner. Follow that. We have one of the largest reserves of coal. China became, very developed, and then it thought about, how do we clean up the system. We haven't gone to that level that we can start thinking about, we should not be using coal.
Right.
So these are two things which needs to be done.
Right. So on that note, thank you all the panelists. And on that note, it's a wrap on this current edition of Fortune India Boardroom. For more news and updates, keep following Fortune India.